Greetings, fellow traders. I'm Dylan, a research strategist at Pepperstone, presenting the latest weekly update on As Good as Gold. So over the past week, gold prices have been on a downward slide, but the bull strength shouldn't be overlooked. Despite the drop, key factors do support gold, including concerns about a U.S. recession, aggressive Fed rate cut expectation, rising Middle East tensions, and increasing uncertainties in the U.S. election. However, massive sell-off in risk assets triggered by yen carry trade unwinding and a more cautious risk appetite among traders during extreme market swings are major roadblocks to gold's short-term rise. Traders are now eagerly anticipating the Fed's comments on the economy and also the interest rates. Next week's U.S. retail sales, core CPI data, and the Jackson Hole Symposium at the end of the month could be crucial for determining gold's next move. Looking at the daily chart of gold against US dollar, prices have been swinging between $23.50 and $24.80 since early July. Even though gold has closed lower for the past 4 days, the pronounced wicks on the candles indicate that there's still a battle between buyers and sellers. The trading ranges last Friday and also this Monday were notably wide at $67 and $95 respectively. After gold fell below $2,400 yesterday, is now testing the upward trend line from mid-February and moving towards the 50-day moving average. Given that the 50-day moving average provided solid support during the late July dip, if prices confirm to break below the trend line, $23.68 might offer some buffer before gold bears push prices back to $23.52. And if bulls regain control, a successful push through $24.30 could open up further upside potential. Well, despite a $100 pullback from the July high of $24.83 and current selling pressure, I do believe the bullish case for gold remains quite strong. Because fundamentally, after Powell indicated a rate cut in September and somehow shifted focus from inflation to the labor market, the July jobs report showed disappointing numbers. Just 114,000 new jobs added and an unexpected rise in the unemployment rate to 4.3%. Furthermore, the July ISM manufacturing PMI fell to 46.8, which is more contracted. So the Wall Street quickly adjusted its rate cut expectations in response to Powell's dovish stance and a weaker U.S. data, with traders now betting on a 50 basis point cut at the September 18 Fed meeting and a total of 115 basis points for the year. More aggressive rate cut expectations lower the opportunity cost of holding gold, supporting its price. And although the U.S. Services Index for July came in slightly above expectations on Monday, and Fed officials like Gooseby and Barkin tried to calm the market, widespread selling in the U.S. equities and increased treasury buying indicate persistent recession fears. With escalating Middle East tensions and Harris surpassing Trump in predicted polls, along with her recent announcement of the running mate, gold's appeal for traders seeking safe haven assets is likely to grow. Well, even though the fundamentals for gold, including central bank purchases, are quite solid, I think recent global market volatility has been largely driven by yen carry trade unwinding. With the Bank of Japan tightening policy and the Fed poised to cut rates, a lot of money is just being pulled out of global equities, and this kind of panic selling can weigh on the gold market. In this extreme uncertainty, traders are more conservative with their risk appetite. Instead of gold, they are leaning towards buying funding currency or just even holding cash. Overall, despite the impact of yen carry trade unwinding and global risk asset sell-offs, I believe the fundamentals do suggest that gold remains in a bull market. I think next week's U.S. core CPI, retail sales, and the Jackson Hole Symposium at the end of August are key events to watch before the September FOMC meeting. These developments could determine whether gold continues to follow the carry trade unwinding trend or returns to its fundamental-driven path. If core CPI significantly falls short of expectations or even posts a negative month-on-month change, along with deteriorating retail sales and a potential signal from Powell for a front-loaded rate cut in September, the market might turn more bearish on the US economy. This could boost gold and, potentially push prices back to test the $24.83 high. And even if traders lean towards holding cash, the underlying fundamental narrative should support gold staying elevated. So that's pretty much for this week. If you have any ideas on how the upcoming economic data and Fed speaks might impact gold trading, drop a comment below and let's chat about it. Stay tuned with Pepperstone for more insights and updates. And until then, happy trading!